and welcome to the CNBC-TV18 Global Dialogues. The Infosys stock has seen a 90% up move since Salil Parekh took over in 2018. The company has been the best performing tech stock with a 50% gain and is likely to report industry-leading growth this quarter at 2 to 3% of revenues. Further, Infosys has also turned carbon neutral 30 years ahead of the 2050, the timeline that was set by the Paris Agreement. In more news, the company has completed the acquisition of award-winning digital customer experience, commerce and analytics company, Blue Acorn. Salil Parekh, the Managing Director and CEO of Infosys, joins me now to talk numbers and strategy. Salil, always a pleasure. Many thanks for joining us here on Global Dialogues. Let me start by asking you about the transformation strategy that you had put in place when you joined the company almost 3 years back in 2018 in January, Salil. The focus then was on winning large deals, on becoming more relevant in the digital space and skilling employees, as well as further efforts to localize. Now, you've been able to achieve good metrics on each of those parameters that you had set out. So as you start your fresh year, is there going to be a new strategy? Will you do a little bit of the same? Will it be something different? Are you going to sharpen and refine the current strategy? What should we now expect?
So thanks, Shereen, for having me. I think absolutely we've had many of those areas, digital, reskilling, focus on what we do with our employees, all of that working well. Our focus today going ahead is really continuing with where we are. We'll close out the third year in March, and at that stage, we'll start to look at what could be the further refinement. What we are really seeing is much more work on digital transformation. As you know, we reported 25% growth in digital in the previous quarter, and we see that traction continuing. About half of our companies now focused on digital, and we're seeing more and more work in the cloud space. We launched our own cloud brand, Infosys Cobalt, a few weeks ago. So that should continue, and much more refinement in that direction.
Okay, much more refinement in your transformation strategy, and you hope to be able to put that out in March when you complete the 3 years. But Salil, on the digital front, because when you posted your numbers, you did talk about 50% of revenues coming from the digital business soon. Can you quantify that for us? What is the timeline that we're looking at?
Soon, really, Shereen, it means in the next few quarters, because we've been growing at this very good pace of 25% for some time, even through this whole crisis environment with the global economies in a difficult situation. Our growth in digital is continued, because the focus for many large enterprises is really to adopt digital and drive it through. So really in the next few quarters, we hope to see us crossing over to the 50%.
Okay, next few quarters crossing over the 50% in terms of digital revenue. Salil, what we are seeing today is a resurgence of cases across the US and Europe when it comes to COVID. Is that a concern? Are you starting to hear nervousness from clients already on the back of that?
So today, Shereen, we are seeing that the cases are increasing. The model that we built, the scenarios we built, had anticipated some of that to come about. And our growth guidance, which is 2 to 3%, bakes in some of that. Of course, if there's an extreme scenario, we've not baked it in, but we don't see that coming today. And we don't see at this stage any nervousness from our clients, especially on the digital portfolios.
Okay, so at this point in time, holding on to the guidance that you've given out, I want to talk a little bit about what we are now starting to see in a post-COVID era, Salil. When I spoke with Rajesh Gopinathan, he said that we're at the start of a first phase of a multi-year tech transformation cycle. How are you reading that? And what is this going to mean structurally for each of your businesses going forward? What is it going to mean in terms of spends as well that you foresee?
So there, the technology world is really going through a massive change, and any large enterprise is leveraging technology for different uses. So you look at businesses, whether in retail, in banking, in insurance, everyone's leveraging technology to make sure that they're connected with their consumers, their customers in a direct way, in a digital way. All of that is a benefit for us at Infosys, because the more there's a focus on these digital technologies, the more we see a growth in the coming years. once we get beyond the COVID situation, my senses will come back to where we were as we entered it. We are at a very good growth pace of 9.8%. My senses will start to come back to that. And now this wave has further accelerated. And in that, we will see more and more of it in the years to come.
Okay, so if you believe that once we have dealt with COVID in the best way possible and the uncertainty starts to ebb, that we could go back to pre-COVID kind of growth. But, FY22 and beyond, Salil, given the fact that we are talking about this great digital acceleration and the capabilities that you've been able to define over the last few quarters, what will that mean? I mean, when are we talking about double-digit growth, for instance, for you as well as for the industry?
So there, with respect to the industry, difficult to say, Shereen, but I think in terms of where our focus is, we start to see that more and more of those sorts of activities, whether it's in the data space, whether it's in the cloud space, whether it's the Internet of Things, whether it's artificial intelligence, those investments, if they're right and appropriate, and we believe they are for what we've done, those will see us give good returns in terms of our growth. These are the sorts of things that large enterprises and clients are really working on today. And we believe that because of what we've put together, we are quite close to them in helping them on that journey. And so once we are beyond the COVID environment, we'll start to see more of that relevance with our clients coming to show.
When we talk about this relevance with clients and you talk about spending as well, and the focus has been on driving those large transformation deals. Now, how are clients funding those deals? Is a lot of the legacy business being cannibalized in order to fund the new transformation deals? And what is the outlook then in terms of spending? Are you likely to see a significant change in spending patterns, quantum, size?
So there, many large enterprises are doing much more efficiency on their traditional spend, much more automation. And that's another one of the tenets that we've built very aggressively. It's a historical strength of Infosys, and we have further expanded upon it. That automation approach allows large enterprises to make their traditional spend more efficient, and part of that is used to drive the digital growth. Now, what that does also is allow them the acceleration they're seeking. As they see more growth, they tend to invest more in the digital spend. And that's the approach we think will further be cemented once we get beyond the immediate crisis.
Mm-hmm. So, since we're talking about big deals and we're talking about staying relevant to clients, Salil, this has been a big focus area for you. We've seen the Vanguard deal go through in this quarter. Is it going to be increasingly harder and challenging to get those kind of deals, given the landscape, both competitive as well as the uncertain environment? Or do you believe that you are now poised to be able to do much more of that kind of transaction?
So those sort of large deals or large partnerships, Shereen, are ones which are in our pipeline. But as I've shared in the past, those are more volatile because of the size. So in a given quarter, it's difficult to predict what it will look like. But if you take a full year, we think we have a good pipeline, a good set of connects with our clients, that we will continue to deliver on the large deal expansion across a longer period like 4 quarters.
Okay, so a little more color on this pipeline that you spoke of, since you feel confident of being able to execute on them over the next few quarters. If you can shed a little more light on this pipeline of large deals that you just spoke to me about.
So there, what really stands out is where large enterprises are looking to make digital transformation in a particular area, one part of their business, the mainstay of the transformation. And here you see 2 types of businesses. One, businesses which have actually been very early adopters, and they're seeing tremendous benefit in this difficult economic environment. And they're thinking, why don't we go faster in the other areas of the business? And there's another business which was slower to start with, and they want to catch up and accelerate even further. So those are the sorts of things that we are seeing in the pipeline. It's spread out across different industries at this stage. So there's not any one industry that's concentrating it.
Okay. Salil, let me ask you about the margin outlook and the margin guidance as well. FY21 EBIT margin guidance of between 23 to 24%. Do you believe that this is sustainable? Do you believe that this is the peak? Or do you believe that you could, in fact, better on it?
So that guidance we've given for this financial year, we had an extremely strong quarter at 25%, over 25% operating margin in Q2. One of the things we'd seen at the start of the financial year was we had put in a lot of care in what we were spending on and really being very disciplined about expenses. Of course, travel itself has come down quite significantly given the medical situation. Some of those things will start to come back, but what will remain is our commitment and focus on being a high margin business, and those sorts of things will go on. We have many levers that we identified, for example, the mix between on-site and offshore, the way we want to look at subcontractors, how we want to deal with expenses. Those levers will benefit us in the quarters ahead, but we've not given a guidance for the next financial year at this stage.
Given the fact that some of these levers that you just spoke to us about, is there a possibility of doing better, or is there a downside risk, or do you believe that you'll be able to hold the guidance that you currently have, especially with some of the concerns on the visa front and the visa costs front? How is that going to be baked in?
So there, specifically on what's going on with the visa situation, some years ago, we started to build out what we call local digital centers in Europe, US, and in Australia, where we have a large business. Those centers are helping us specifically in the US. We're also doing recruitment from colleges in the US and recruitment at lateral levels. So we want to make sure that our business model becomes more resilient, even as some of these regulations may change over time. With respect to margin, I think our approach really is we have some levers that can benefit us. Equally, there are some situations, for example, travel, which was very low, which will come back. And so we remain committed to being a high margin business, but we don't have a guidance for the next year.
You talked about offshoring as well as localization. Do you believe that given where we find ourselves today with COVID and perhaps the previous hesitation of having to move stuff offshore, do you believe that we're now going to see a bigger pickup in momentum when it comes to offshoring?
Well, what's clear there, Shereen, is I think, again, large enterprises have realized that offshore environments working remotely is working quite efficiently. So what this will do, but this is more medium term, is it'll really open up much larger areas where we can do remote work. And once the concept of remote work is internalized, the location then becomes the second point. And I think that will definitely benefit what we want to put in place in front of our clients.
Mm-hmm. Salil, let's talk a little bit also now in terms of the announcement that you've made with respect to the ESG metrics. And of course, this seems to be the big buzzword. I was just having a conversation with Brian Moynihan at Bank of America, and they're driving this along with the World Economic Forum as well. Do you believe that this is going to matter from an investment point of view, from a client perspective? Are they going to look at companies differently and use the ESG lens at all when it comes to dealing with people like you?
So on ESG, Shereen, first, we are extremely proud that we are carbon neutral here in 2020, so we're delighted. This work was started years ago at Infosys, and especially with the leadership of all the founders and many, many people within the company. And that's a big achievement for us. We've now set goals for 2030, and we've set goals in each of the three areas: environment, social, and governance. Our view is while we are focused on our employees, our clients, our shareholders, we also want to make sure we keep our attention to what's going on in the world at large. And this is from that perspective, and historically it's been something Infosys has always thought about. Now, in terms of what clients will look at and what investors will look at, I don't know specifically, but I know that there's clearly an interest from within the company to do this. And I know that what you mentioned, for example, with what Brian is doing or the World Economic Forum, there's an external interest. So we hope those two will align and give us some benefits.
Well, that certainly will be the hope. But Salil, acquisitions, because that has also been part of your strategy over the last 3 years. What next and where next? What will the focus areas be now specific to acquisitions?
So in acquisitions, we've done quite well in the past few months. We've had 3 very strong acquisitions. One where we partnered with new technologies and ServiceNow, another with Adobe, another with Salesforce. These are all in what we've defined as our digital footprint. And we think this is something that will continue. Again, here we have a good pipeline of potential acquisitions that will continue. And the location, we've done some in Europe and some in the US, and that's generally what will continue as we look ahead.
So is it likely to be the same track that you are going to follow, a bunch of acquisitions through the year, 3 or 4? Is that fair to assume?
So the thinking for us is there's no specific number, but we definitely have a view that we will do a number of these in a 12-month cycle again. It so happened that all 3 of these came in the past 3.5 months or so. But in general, across a year, there'll be multiple acquisitions. There are many factors which have to be satisfied. So there's no specific target on a number of acquisitions.
There might not be a specific target in the number of acquisitions, I understand, but what is the war chest that you're working with? Because you're very clear that this will be part of the strategy to drive growth. So what's the kind of war chest that you've put aside to be able to conclude some of these transactions?
So there, we are really fortunate. First, we have over 4 billion in cash on our balance sheet. We have no debt. So, and we generate roughly 2 billion in cash a year. We have a commitment to return cash to shareholders, but beyond that, there's genuinely sufficient amount that we don't have a limit to what we can do. It's really more focused on what we can integrate, what will make sense in terms of the digital footprint we have, and how is the culture of the 2 companies, what is the pricing. So there's no specific, even internally, watches, but there's an openness to look at different ideas.
Okay, and openness to look at different ideas. But Salil, I want to go back to the deal pipeline that you spoke of. And if I were to take a look at the last 4 quarters, the average deal wins in the last 4 quarters at about 8.35 billion. Since you spoke about a robust deal pipeline going forward, can you give me some indication of what this number could look like?
So that's a good number. I think if it's 8 billion over the last 4 quarters, that's a good number in which for us to target over the next 4 quarters. But we don't have really guidance on that. But that's the sort of a number that has helped us over the last 4 quarters, and we hope to continue to do something like that as we go ahead.
Okay, so you hope to be able to replicate that 8 billion number as far as the deals are concerned in the next few quarters. But Salil, the key risks that you're going to be watching out for, COVID and the COVID-related uncertainty, of course, the big one. But outside of that, and specific vulnerabilities in specific sectors like retail, etc., what's looking softer today? What would you be most concerned about? So
there, what we started to see is our high-tech business is really doing extremely well, and we shared that just at our results time. We have good traction in financial services. We see that sectors like retail and manufacturing, which were initially impacted in the March-April timeframe, was steadily, especially retail, steadily starting to come back. We'll have to watch out now for how these new set of cases come about. But each month we'd seen a small, slow progression in that. And manufacturing, while a little bit behind on that, was also progressing each month. So that's how we're seeing the different industries today. But we'll keep a watch out as we go ahead and what the different industries mean.
Since you spoke about refining the transformation strategy, what will that mean, Salil, in terms of future investments? What will it mean in terms of hiring, both local as well as on-site? Just leave me with an indication of how that's expected to pan out.
So in terms of hiring, we have plans of recruiting approximately 15,000 college graduates in India and approximately 1,500 college graduates outside India across multiple geographies. So this is over the next 12 months, so fairly robust hiring. In terms of the strategy, really, our focus will be once we get beyond the COVID situation to have a real look and see where the next phase of transformation is. But in terms of investments, our plans are to drive all of that investment from our operating business. So not to have any new incremental investments which will impact our operating performance.
Well, Salil Parekh, always a pleasure. Here's wishing you the very best of luck. Thanks for sharing the outlook for Infosys on the Global Dialogues. With that, it is time for us to wrap up this edition of Global Dialogues. From all of us here, goodbye. Thanks for watching.